we really saw silver come out strong as a safe haven, as a monetary metal. It reacted strongly to the war news like gold, not like copper. So we've seen in recent weeks a strong reminder that the world does still see silver. This is when silver really shines. You talked about factors coming together. The perfect storm for silver is when people are buying it because they're worried. Safe haven demand is pushing gold and silver up. And that very same thing is shutting down industrial metals mines, zinc mines, lead mines, and especially copper mines. Those go on care and maintenance. Supply is visibly constrained at a time that demand goes up. And that's when you see these little manias where silver just leaves gold in the dust and it goes nuts.
The industrial applications of silver have been on the rise over the past few years, prompting investors to question whether the metal is still behaving like a precious metal like gold or like an industrial metal like copper. If it's still behaving like a precious metal, then it would react differently during various economic conditions compared to the conditions that would move copper prices, for example. According to Lobo Tiggre, the editor and founder of the Independent Speculator, silver very nearly became classified as a full industrial metal because it was no longer reacting to the same news as gold, but trading more like copper and oil. But that changed a few weeks ago when the Israel Hamas conflict first broke out and both gold and silver prices jumped. Lobo believes this means the world still recognizes both precious metals as money, and as the economic and geopolitical crises deepen in 2024, millions of investors will flock to both assets, which will put significant upward pressure on prices. Lobo says this could be the perfect setup for a much-awaited outperformance for both gold and silver in 2024. While Lobo is bullish on silver, he is much more bullish on gold stocks. He describes them as his highest conviction trade for 2024, taking over from uranium, which was Lobo's highest conviction trade for 2023. Uranium prices have increased by around 40% over the past 12 months. Lobo says it's time to move from that yellow metal into the other yellow metal, which the popular investor and speculator predicts will have a very good year in 2024. Lobo recently shared his outlook on gold, silver, and the United States economy with the Investing News Channel at the New Orleans Investment Conference. While his sentiments for the first two are mostly optimistic, Lobo is concerned about the trajectory of the U.S. economy, which he says is facing a recession in disguise. Lobo predicts that there will be greater economic woes for the United States in 2024, which may force a Fed pivot that will, of course, be very bullish for gold and silver. We will now bring you clips from the interview. Please watch, share, and like. Also, ensure you subscribe to the channel and turn on post notifications so you never miss any of our videos. Thanks, and enjoy the video.
So last year, I was the contrarian in that my highest conviction trade for 2023 was the other yellow metal, uranium, which is not a stranger to your audience, right? But, to come to a Gold Bug conference and talk about uranium is my highest conviction trade. It was fun. So I want to be careful about what I'm saying here. I'm not saying I'm done with uranium. I'm not saying I've sold all my uranium stocks. Though, like Rick Rule, I've taken a lot of profits along the way here. But it's no longer the hated trade, that was on sale. Nobody wanted to hear about uranium anymore. A lot of these uranium stocks are now at multi-year highs or nearly there. So still bullish on uranium, still very positive. The demand case is very, very strong. But the stocks are no longer as cheap as they were. And a lot of the mothballed production, the part of the supply story that has been under voluntary constraint, that's starting to change. So for 2024, which is different from farther going forward, we need to see how the balance works out. Farther ahead, I don't think supply keeps up. I'm totally sold on uranium going forward. But for this coming year, it's no longer my highest conviction trade. So that actually leaves us with the other yellow metal. So maybe it means a little bit more for me to say, no, I'm looking at it, looking at the recession. It's here on a global level, and I think it's here in disguise in the U.S., but I think the disguise falls. We've talked about that. I only have a couple months left to be right on my call about recession by the end of this year. But even if I'm wrong and it slides into the next quarter, I still think it's coming. I think the recession denial goes away, and I think that's very, very bullish for gold. And on top of that, you still have the central bank buying. We have geopolitical stuff stirring the pot. So there's a lot of things that, and inflation isn't going away. Its expectations are starting to slip. The Team Soft Landing kind of swept that under the rug from the last PCE report. But the near-term and long-term inflation expectations started to creep up, which is quite significant. So all of that is, a way of saying, nothing, gobsmackingly new here for the audience. They probably know all this stuff. But again, for what it's worth, I'm not a perma bull, but my highest conviction trade for 2024 is gold stocks. Oh, and one other thing. Remember what I said about the uranium stocks? Many of them are at 52-week highs or nearly there or even multi-year highs. Not so with the gold stocks. Because of higher costs and all these things, a lot of them are on that doesn't mean you can go out and buy them all. But what I'm saying is there's value on the table. There are compelling value propositions, many stocks that are just producers that are cash cows or mine builders that have all the money to build their mine. They're going, right? And they're on sale at 52-week lows or nearly there. So the value proposition, I think, is really quite compelling in a number of these gold stocks if you can pick the right ones.
Okay, and just to clarify, so the highest conviction trade for 2024 is gold stocks, not gold itself?
Well, yeah, and that's actually an important distinction. This, again, is not new. This is something my mentor, Doug Casey, taught me from the beginning. To my way of thinking, gold is not a speculation at all. I don't buy gold because I think the gold-dollar exchange ratio will go up or down or whatever. I buy gold because it's gold. I can hold it in my hand. It has value. If I need it in case of emergency or opportunity, it's there. It's physical wealth in my direct control. It has nothing to do with where the dollar's going or the Fed or the markets or anything like that. It is what it is. As a speculator, though, if I do think the gold-dollar exchange ratio is likely to go up or down, you could go long or short, then the stocks are the way to make money on those movements. I don't trade gold at all. It's my way of saving. It is literally how I've saved for the long term. And I don't buy 30-year bonds or none of that nonsense. I save in gold.
Lobo has brought up a very important thing about investing in gold, one that all popular investors and speculators agree on. Gold is not an asset you buy to trade or sell after you make a small return on your capital. It is an asset you buy to hold to serve as a means of protecting your wealth as time goes on. Despite being the world's most in-demand currency, the United States dollar is losing about 7% of its value every year. This is why the dollar continues to lose purchasing power, while the prices of assets like gold are rapidly climbing. Popular gold bugs have also theorized that a massive increase in gold prices, say to $20,000 or $25,000 per coin, would mean inflation is completely out of hand and all of our systems, as we know them today, are gone. But what better way to prepare for all scenarios but by buying an asset that has survived wars, pandemics, several reserve currencies and empires, and served investors for thousands of years? During the interview, Lobo also gives his outlook on silver, critically examining its role as both a precious and industrial metal and what it means for prices as we go into 2024.
I love silver. I understand silver is the word for money in many languages, but just look at it. It often trades more like copper than gold over the last year. You'll see that in the intraday charts. You'll see days where gold goes up and copper and silver go down. Or you'll see days where gold goes down and copper and silver and oil will go up, right? It's acting like an industrial metal. And it does have that industrial use, which is, in some ways, it's great. It's on top of the monetary story. You have this increasing industrial demand. It's an energy metal. You need it for the solar panels. Nothing bad with that. It's all good. But it does mean that if you're looking at industrial metals headwinds, if you're looking at a recession, then that tailwind for silver turns into a headwind. And you can't ignore that just because silver's money, right? So that's been my Darth Silver thesis. And the new news, we're getting it here, New Orleans, is that we really saw silver come out strong as a safe haven, as a monetary metal. It reacted strongly to the war news like gold, not like copper. So we've seen in recent weeks a strong reminder that the world does still see silver in this other way, not just as an industrial metal. So it was an open question. Is silver just becoming an industrial metal now? And the latest market action is saying, no, we're not there yet. Silver is still being treated by, not just those evil Darth types of the world, but even comics traders are willing to move the price of silver based on monetary phenomenon, safe haven phenomenon, not just industrial demand. So that's great. That's good to see. It makes me much more optimistic about silver tracking gold in the recession ahead. But I still, call me Darth all you like, but I still think it will probably underperform. If the main reason that gold is going up in 2024 is the recession, at the very least, it takes away that tailwind that silver had. I tend to get less worked up about these things. People get all excited about how much silver is left in the COMEX warehouses or whatever, or the LME. First, remember that silver is consumed in a way that gold isn't. I mean, it is literally consumed. It is put into things like eating it, electronics that you can't get it back out of, and it goes into the landfill when it's done. And, it's like become a new mine in the future. It's used up. So the stocks are always lower than gold, and they're always fluctuating. They go up and down, but it's also produced in much larger volumes. And then that brings us to the other main thing to remember is it's a byproduct. Like even the purest silver mine in the world, it's not metallic silver that they're mining. The highest grade silver mines in the world are really lead or lead zinc mines with huge silver credits. Even if it's kilos per ton of silver, it's kilos per ton of silver in galena or sphalerite, these sulfides of base metals. But even that isn't, the single largest source, as I recall from the latest numbers I've seen. People combine lead and zinc, and that makes it look like the largest source. But if you look at just lead or just zinc, copper is actually bigger. These big copper porphyries, these giant copper mines, very low-grade silver in there, but they're so huge that they produce enormous amounts of silver. So that's another complicating factor. And I'm not being anti-silver here. This can actually be a very good thing for silver, particularly if what's moving gold and silver is safe haven demand, monetary metal demand. Well, that means the economy is looking so good, and that's the sort of thing that shuts copper mines down. So you can have a situation, this is when silver really shines. You talked about factors coming together. The perfect storm for silver is when people are buying it because they're worried. Safe haven demand is pushing gold and silver up. And that very same thing is shutting down industrial metals mines, zinc mines, lead mines, and especially copper mines. Those go on care and maintenance. Supply is visibly constrained at a time that demand goes up. And that's when you see these little manias where silver just leaves gold in the dust and it goes nuts all by itself. That's not a prediction for 2024, but it could be. The cards are in the deck in front of us that it could play out that way.
Meanwhile, gold prices have fallen from last month's high, currently trading at $1,938 due to a range of factors putting some negative pressure on price. To begin with, there has been no escalation in Middle East tensions, the same issue that sent gold near all-time highs in October. U.S. Federal Reserve Chair Jerome Powell also recently expressed some hawkish sentiments, stating that he was less confident that the current interest rate policy is sufficiently restrictive to get inflation under control. More rate hikes will mean a stronger dollar and weaker bullion prices. However, Tuesday's CPI data will make the Fed's next line of action clearer. Regardless, markets broadly expect the Fed to keep rates at the same level, which will help relieve some of the pressure on gold prices. Do you think the Fed is going to announce another rate hike despite higher bond yields, which are significantly worsening tightening conditions? Please share your thoughts and comments in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.